I am Brendan Urick, the CEO of Electric Royalties. We are a royalty company focused exclusively on clean energy metals. We've got 22 royalties in our portfolio, focused in and around those projects in North America, Europe, and Australia that could fit the bill to be a domestic source of supply. We've got 2 cash flowing royalties and a couple more expected to come into production next year. And we've just announced a major deal, in this last month here that I think really kind of helps transform the company. So it's going to be an exciting year. I know markets are terrible right now, but we're very excited.
And as am I. Anything lithium is exciting to me. So tell me about the deal. I kind of saw the numbers looked kind of crazy, but tell me about the structure of the deal, and we can get into what you've actually bought.
Yeah, well, judging by the recent market reaction, I don't think people quite understand what the opportunity is here. We're not buying and holding 126 lithium properties. There's not going to be an onerous holding cost to us, and we're not really changing our business model. It's really buying a royalty prospect generation business. Perry English is the guy who's gone out and staked all this land in and around the best lithium projects in Ontario. 1 million acres, okay? 126 properties. Of those properties, though, 105 already, or 100 plus, are already being sold off to third parties. And so we're actually expecting to make money on these properties. It's forecast to be about 1.7 million for next year, and then it ramps up to about 2 million a year, kind of moving forward after that for the next 2 years. And so this is going to be cash flow generative for us. At the end of the day, once these groups have actually earned into these properties, we're going to get royalties on those properties. And so, it's a very creative deal. Our deal cost is only $3 million cash up front. The cash flows back from these properties is actually going to pay for the deal. And like you said, lithium is only going to get bigger and bigger and bigger as we expand out here over the next decade. I think they're forecasting 30% growth annually. And so we kind of see Ontario's potential, kind of like the oil fields for Saudi Arabia. We think that could be lithium in Ontario. So we're really excited about this.
Yeah, like I say, it was when I looked at it, it's like over 1 million acres. It's just, I guess people don't really understand the whole kind of staking process and, how much validation of what is there is there for them to look at. So when you say these are 126 lithium properties, what data is that? What do we know?
So it's very early days from that point of view. Like I said, all of our the land that has been staked is in and around all the best lithium projects already existing in Ontario. But the funny thing is that when geologists were exploring this ground, 15, 20 years ago, they wouldn't even notice this in the notes, where they'd be pegmatites at surface, which are now they're looking at as drill targets from surface. And so the funny thing is a lot of these properties are just being walked for the first time. They're finding drill targets at surface all over the place. And, you look at the groups that have advanced their projects, they're not spending huge amounts of money. There's groups that have been $10, $15 million are getting to a PEA with, billions in NPV. And so I think it's very interesting. I think a lot of these projects could be moved ahead very quickly. There's lots of targets. This isn't like, we've been scouring this ground and we have to really look for obscure clues. They're finding drill targets, right? Just at surface by walking the ground. And so, and the development timeline for these lithium projects, you're really looking at more of like 7-8 years as the target versus 15. And so there's actually a much quicker development timeline. And so I think it's of the prospect generation opportunities I've ever looked at. This is the most exciting thing that we've ever seen.
Right. And what exactly we're looking at? That's what I'm trying to get at. Like, we're seeing a lot of excitement in the marketplace and some huge valuations being created for, companies like, Frontier, like Lyft, like Brunswick. So lithium pegmatite is definitely the catchphrase of the moment, certainly in Canada. But is that what you guys are talking about here across the board? Lithium at surface?
Yeah, lithium at surface. Exactly. We made a couple early bets on lithium, a couple years ago. We got in very cheap. And these were really the deposits at the time. They were the most advanced, but they were, historic resources like at Seymour Lake. Then they raised $70 million. Now they're trying to fast track that project to production. And so, I think it's very exciting. It's early days yet, but all lithium and drill targets at surface. Like with 1 million acres in and around all the best, area for this. It's going to be it's going to be a lot more news flow for us, definitely. But I look at this is really the perfect marriage with our current portfolio. We have a portfolio of 22 royalties already. I think if you look at, where we expect cash flows to start to really ramp up, it's, kind of 3 years out from now. We have some cash flow royalties. We have some more that we're expecting to come into production over the next couple of years. But where our portfolio really starts to generate cash flow, it's kind of 3 years out. And so we thought this was a perfect, this covers all of our G&A, right? Our G&A is very low. The revenue from this portfolio guarantees that we have the power in our hands, to make sure that we don't have to ever raise money again. And so that's been a goal for a long time. I think I've stated that with you for, going back at least a year now, maybe two. It's tougher, easier, harder said than done. But that's one side of it. But to get a deal like that, where you're knocking something like that off your list and get all the upside, from these royalties, I mean, it's kind of the best of both worlds.
Okay, so I just want to be really clear about these kind of layers of revenue, and when they're kind of coming through, because it's one of the hardest things there is to do is value a royalty company, right? There's so many ways and so many different multiples used to value some companies. So you kind of got this $5.76 million coming in over the next 3 years, just specifically against this project, covers your G&A, all good news. Give me a sort of sense of what you see coming through here on some of the other, battery metal royalties that you've got out there.
Yeah, well, it's exciting times. I mean, we just financed Europe's only tin mine, really twice this year, producing royalty that we created. And I think that mine has potential to increase production over the coming years. Obviously, we love where tin prices go. We just financed Northern Graphite, just one of the few graphite producers outside of China, which, funnily enough, we had to fund because China had been flooding the market with graphite concentrate, and that was really lowering prices, obviously. Within days of us closing that, China, initiated an export ban on graphite concentrate. So, I think there's some really interesting opportunities out there in this space, and we seem to be really the only group, really active and kind of nimble enough to take advantage of opportunities like this. So, yeah, I think it's exciting. We've had 40 updates, right, over the last 5-6 months on our project. Not that anybody in the market seemed to care at all, but I think everything is going our way. We have PFS that should come out on our manganese asset, Battery Hill. I mean, it's the best manganese asset in Canada. We've got project financing commitments already coming out on the Mont Saucier project, where they're partnered with Glencore. Feasibility study coming out later this year. Drill programs are ongoing on both of our lithium projects, both in Quebec and in Ontario. And our Oche lithium royalty, we're expecting that should hopefully get through permitting process here within the next kind of 6 months. And they'll start to ramp and include that in the North American lithium operation, which we've been waiting, looking forward to that for definitely a bit over a year for sure.
Okay. And I'm just kind of looking at the market in terms of all equities are, being hammered, beaten up real bad, right? With royalty companies, I think it's been argued by various CEOs that you kind of not necessarily inflation proof or market proof. You get hit like the rest of us, but it does give you time to actually consider, your strategy, your focus, your electric royalties, battery focus. So do you look at the market now as look at some of these gold royalty companies and go, well, at gold prices like this, surely life's got to be better. Are you tempted to look elsewhere?
Honestly, no. No, I'm definitely not. I just think the upside, opportunity, I mean, what we're paying, right? Like those guys usually are paying at least 1 over NAV because they've got so much competition. If I look at our deals, I think we're paying 1/10 of that. I think the upside opportunity in terms of pricing is far outweighs anything you'd see in gold. I know people have been talking about 10,000 gold for forever, but you just look at what happened to lithium prices, the last 3 years have come down a bit, but they went up, like 10% or 10 times, over the course of about a year and a half. And I think there's that potential across the board for these metals, over the next decade at certain points. So I think there's a lot more upside from that, but, we can cherry pick the best opportunities. We're not, trying to compete and just pick up the scraps of what's around. I mean, we're basically picking the exact projects, the companies we want to be supporting, the best assets in our view. And we're the only group there. So I think it's a really exciting time. I think all the stuff that we're doing now, over a 5-10 year period, is going to look very smart. Obviously we're doubling down with this most recent deal. I think lithium is going to be a very exciting space for a long time. Markets are really tough right now, but you can't lose sight of where the future is going.
Okay, great, and I like the fact that you're focused on bringing money through the door, not sitting on trying to bid on sort of long term projects. Is money available to you if you see other deals? This is a great deal. Like you say, I think it's probably better than some people recognize. But are you still looking around, or do you have a view about what the market's going to be doing next year, and perhaps with your G&A covered, just sit back and maybe slow down on the M&A, slow down on the decision making, and see what happens?
Well, here's the thing. I mean, you look at where our valuation is today, and we think it's just crazy. But my family owns about 15%. We have Stefan Gleason, who's a very supportive shareholder. He's 19.9%.
Right.
We have our original partners at Globex who still own about 8%. I think we have, very good hands, probably 70, 80% of our stock, probably on the upper end. So if you look at our valuation today, the the amount of stock that's out there loose trading might be $1.5 million, $2 million. So ultimately we'd buy our shares back, I think, with the excess cash flow, as soon as we could next year, just because that would be a very easy way. And so that's kind of one aspect. But sorry, what was the other part of your question?
Well, it's really about how you view the market, and therefore how do you behave in a market like this. That's what I'm getting at.
Well, I think the opportunities get bigger. I mean, I would definitely say more money's come to the space. We've just done a couple of conferences. We've been cutting back on marketing a lot this year, but it's interesting discussions coming out of that. Funds that were primarily focused gold, and they had a very centralist focus around a geography, are now kind of global, and they're clean energy metals. And we're talking funds that are $500 million funds. We've had a number of groups talk to us. The problem for us is that they don't deploy to small public companies, and so that's really the challenge. But I think there's a lot more money coming into the space. The one thing they've all mostly said is they don't have the expertise really to deploy capital. And so I think a group like us, who's like actively doing deals and has a ton of more deals we could do, I think next year the spotlight will definitely start to gravitate towards us. And that's part of this deal too. I think this deal gives us the size. We couldn't make it happen on our valuation. It was like treading water. We're almost losing ground, especially the last couple of months. But with the R22 royalty portfolio and this acquisition, I think we're now of size that people are going to have to pay attention to us.
Right. Okay. So and let me ask you some rather blunt question, if I may. You referenced the fact that you think your valuation of your company is kind of crazy given the portfolio that you've got, and what you expect metal prices to be doing next year in the space. But how should people view you? Because there's gold or precious metal royalties, easy. We get it. They get the multiples that they get. For you guys, maybe people are kind of struggling to on the supply demand dynamics of each of the green metals that you're invested in. Whereas gold and silver is a kind of well trodden path. It's a bit easier to kind of figure that out. So how do other investors look at this company and go, do you know what? I understand where it's going. I understand why they've got what they've got, and it's not just a case of a random collection of green metal royalty opportunities.
Yeah, well, no, I appreciate that. So, look, I'd say we're the kind of opportunity you invest in us, and we're a pretty safe long-term hold. All the
why?
metals
Tell
that we
me why.
chased are.
Give me the why. Give me the why.
Yeah. So, look, all these metals have exponential growth forecasts moving forward. But at the end of the day, if you were to go invest in and try and pick out one of these commodities, you got to pick a single asset, you got to pick a single mining team, and there's a lot of risk involved with that. Whereas we're diversified across 9 clean energy metals, we're diversified across 22 different clean energy metal assets, and we're really built to be more of a way, one way that you can invest in the entire space and the clean energy space without taking on the risk, and having to pick out individual companies, management teams, projects. I think that's really the key. With our G&A where it is, and our cash flows, the risk side of us, ever going defunct is, much weaker than if you were a single asset mining development company. And I think, over time, our cash flows as metal prices and this trend keeps continuing, all of that stuff will impact our bottom line directly. Our revenues are directly proportional to metal prices. We are protected against inflation, which obviously in this market, it means something. When we actually get cash flows, right, we have no unit production cost, right? It's all just straight cash flow across our G&A. And we don't ever have to put up any more money, right? We have no holding costs. We have no capital costs. So, capital costs balloon on a project, that might be 100% dilution to those shareholders. Not for us. Our cash flow percentage is always going to stay fixed. And because we're in good jurisdictions, we can actually tie those royalties to the project. So, even if management teams make mistakes as that happens, ultimately our royalties really attach to that metal in the ground that we're ultimately going to need, in the near future. So I think it's it's a different way to play it, but much, reduced risk profile. And that's coming from a guy who's 95%, invested in his own company. So he's built it out that way, to diversify his own investment as well, and make it, a little bit less risky.
Okay, well, Brendan, I'd appreciate you coming on. I'd like to say I'm particularly excited, given the current market vibe around lithium pegmatites, etc. What you managed to pick up there, and I didn't realize the kind of the cash contribution component to it. So yeah, all good stuff. Well, stay in touch with us. Obviously, tough markets out there, but there's always stuff to talk about. We'll see you soon.
Thanks a lot for having me, Matt. Appreciate coming back and talking to you anytime.